following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we got a market that got goosed a little bit this morning, and that was by our Dudley Do-Right Fed president, who basically came out and said, you know, we're just kidding. We really didn't mean it. You know, those horrible job numbers last week, forget them. Raise? What raise? We don't know anything about a raise. And we'll get into that a little bit more. So we got a little bit of goose from a Fed. Those last about one day. They come out and probably about as predictable as the groundhog out here on, what is it, February 2nd or 3rd, saying how long the winter's going to be. But well, I think that a lot of this kind of a nervous market, so people kind of jumped off. What we don't have is any volume. We're up 18 points on the S&P cash, under 1.8 billion shares. And in fact, since about 1245, what have we done? About maybe just about 300 million shares. So it's been very quiet since for a long time. Let me put it that way. And it's gone, very, very quiet. So we'll see how this market comes out. I'm always thinking that this market has a huge ability to drop a huge amount in one move. And it may be one of these things where we just open up one day and it's down 50, 70 points on the S&P cash because they continue to hold it up. Generally, what happens is shorts tend to exit, get demoralized, and what happens? The bad news come out, and there's nobody there to buy. The people that want to buy get frightened and can't. The people that are the natural buyers, i.e. the shorts, are not there, and the market really plummets. And there's nothing more dangerous than a up market with no shorts in it, because that pretty much means that everybody's on one side of the boat. Now, this morning, could this been a little bit of manufactured news? I suspect so, mostly because the Fed president kind of went off his predetermined comments. I suspect he did that when he was seeing that the futures are down about 200 or 100 some odd points on the Dow, although I don't think that was so important. But I've played this a couple times. I know we always get new listeners, but this may be one of the most insightful things other than Mr. Powell has said. I play him from time to time. But I think this is probably extremely insightful from L. Arian, who I guess is not, he's now somewhere else, not at PIMCO anymore.
So what we need is for markets to consolidate in the middle. Instead, markets go one way or the other. So when we have really good days, that actually makes Fed officials nervous, right?
Because really good days in the markets, you mean?
Really good days in the markets because it takes prices beyond what's justified by fundamentals. They worry about excessive risk-taking.
Well,
they worry about
down
financial
days either.
And they don't like down days either, right? So what we need is a period of consolidation. The trouble is that the markets won't stay in the middle. The markets will either be discouraged by very low rates and go into high risk-taking, or will switch the other way around.
And that's it. Markets don't stay going flat forever. If you had money in a market that went nowhere, you'd eventually take it out, which means it goes down. Maybe somebody decides to buy it, and then we get the whole price discovery action all over again, and you get swings, and of course get gamblers. And there's nothing worse for a market than absolutely no movement. That generally means that you're building up steam for a huge movement one day when the underlying fundamentals change in either the market or the stock you're in. But be very careful about a quiet market, and be very very nervous about a market that has huge blow-off tops in it. We've been continually seeing these in several stocks out there, so we'll continue to keep an eye on it. I am one to think that we probably have a good chance for a reversal today. We'll see how that ends up. My guess is it will happen in the last hour of the day. If it does, they're not going to make anything easy for us. I got to get that from Proud Mary, don't I? I've got to get that little clip to play, because we don't like things that are easy. We like them hard. I'm going to have to get that. I'm writing that down at the first break. But I do digress, and we got a lot of stuff to talk about in the news, so we will take a look at it. As always, we like history.
And it's all just a little bit of history repeating.
I know a lot of people that do long-term studies on the S&P, and one of the things I warn them about is the S&P has not always been the S&P. It gets changed regularly. Not only is there a survivorship bias in a lot of these indexes, part of the other thing is the actual compilation is changed from time to time. On this day in 1988, the stock index was overhauled at least once. Instead of being made up of 400 industrial stocks, 40 utilities, 40 financial stocks, and 20 transportation issues, its industry weights now float freely. So the stocks from all sectors are represented by market value. So, as I say, things change. I don't like to look too far back for signals of what happened before. I like the patterns. But especially in indexes, it's not uncommon. If you're looking for something that's fairly tiny to have been wiped out by either a physical change in the index and the characteristics and the character of it changing, or just survivorship bias where the worst stocks get thrown out and you get a new faster horse, probably not really showing you the underlying strength of the entire market, just of the survivorship bias in those stocks. As always, if you want to get financial history on the state, you can check out Jason Zellwig's blog, and I always have it listed here if you're watching on Tiger TV. What else do we have? Of course, it was a mad market on Friday. We had some huge down futures numbers. And, of course, we had Mr. Fed himself, Dudley Do-Right, I think his name is Dudley, come out and try to support the market this morning. Be very curious about how we close today. Volume just 1.8 billion shares right now on the S&P, on the New York Consolidated Tape, which is pretty weak, especially when we look at the last few weeks. Probably more important than anything else is that we're getting into, at least some people I saw over the weekend, were looking at the statistical evidence on whether these jobs numbers from the government are meaningful at all. Of course, a month or two ago, whatever it was, 2 months ago, we had some fairly horrible numbers from ADP. And the next day, the jobs numbers were just peachy keen from the government. So apparently somebody's really off. Either it's ADP or it's the government. My guess is that ADP wants a job on Monday. Government officials, they don't seem to have to worry about whether they have a job on Monday, unless they probably do something that someone up above them in the political class does not like. What is interesting, I've looked on several blogs and statistical websites, and they've torn apart these job numbers. Well, I think we've gotten to the point now where we can just say that the job numbers are probably next to meaningless from the government. They were, at least the last couple of months were restated, and everything else, what else can you say? Just a horrible guess. Everything was restated. Everything was restated down. The numbers were down. My guess is that I'll be looking at the ADP numbers and not putting a lot of weight back into the government numbers anytime soon. They weren't just stretched. I think Mark Twain said it. They're kind of like white lies, then stretchers, and then horrible lies. And looks like statistically, there's nothing other than cooking the books that would explain these March job numbers and the restatements of the last couple of months. I think that the market's kind of looking at that and thinking about that's it. Yeah, it's meaningless. Oh, I got this too.
And now, deep insights and random thoughts.
And my random thought for at least today is was watching Ben-Hur. Then I went out, and I don't go on the highways. I use the surface streets a great deal. And so I don't see a lot of semis rolling around town or anything. But I was going through town Saturday or Sunday. I think it was Saturday. And I saw these several of these semis. And I'd watched like 5 minutes of Ben-Hur earlier that morning, where they had these horrible like knives coming out of the wheels to chop up the other people's wheels. I'm sure everybody's seen Ben-Hur at one time or another. Then I saw this semi. And this thing's got this... where the regular lug nuts are to keep the wheels on, it's got 6-inch, 9-inch spikes coming out of the wheels. And I thought, well, I'd never seen anything like this. So on the way back, I see 2 more trucks. It's not something I was looking for. But what in the world, what could go wrong with these? First time they run into somebody and it chews them up inside their car with these things. Don't you think that there's going to be 100 lawyers out here going after these? But... just random thought out there. If I put like barbed wire down the side of my car and a bunch of rotating knives, could it be any less dangerous and damaging than these things? Just a thought. Of course, I go back to Ben-Hur, and then I had another thought, which was the James Bond car that had the little thing coming out of the wheel. Well, just a thought out there. But my guess is I'm going to be dragged into court one day because someone's going to get ripped apart by these giant spikes coming out of the wheels of a semi, which are dangerous enough already, much less giant spikes coming out of it. And it's just my 2 cents here. But I guess everybody else thinks I'm probably right. I can't imagine anybody arguing with me that that's probably a bad idea.
That was Deep Insights and Random Thoughts.
And other things going on. Framing lumber prices have been headed down for pretty much since the beginning of the year. And we've had a little bit of a bounce last week on them, but they continue to show probably less demand in the housing sector. And I think that now we can probably say that we're 3 months in and got the latest data out here that I think we've got a trend. A little bit of a jump in the last couple weeks, but nothing that changes the downtrend line in them. And the CME futures on lumber, I think, are headed down. We'll see what happens this week. They don't look good to me. Anyway, we'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And over the weekend, I saw a lot of this kind of headline in the newspapers over the weekend and websites, and that is the dollar's mainstream. Soaring dollar puts the world on sale for Americans. Not so much the other way around. So I was looking for some kind of test in the dollar index today, and we kind of seen it, at least I've seen it out here. I kind of think we've got yet a second retest of that $96.30 area on the dollar index on the continuous contract. And we got down to 96.33, very light volume today. It's up to 96.72. I suspect that we're going to be in this range for a while, but pretty light volume test of that low. So you now got a retest of that lower range out here. And the question is, do we get some kind of surprise move to try to make it blow through that support level at 96.30? Or are we looking at something else out here? And this is the continuous contract. If anybody wants links to these symbols on Yahoo or something, you can always give me a email at path@tfnn.com. Also, if you have anything else to talk about, give me a call at 877-927-6648 or post a message in the den. But I suspect that we are looking at kind of a bottom, at least for this week. And it may take a while. And I think part of the push down was on the Fed, probably into these numbers on Friday, and probably a little help from the markets themselves. But certainly looks like the dollar is getting a lot of help from government officials and the Feds these days. But normally you get a lot of headlines and stuff like that just about when when it's pulled back a bit. But just made me think that we probably were going to get some kind of test today. Other things of interest out here. Apple's iWatch will not go on sale in Switzerland until the end of the year because apparently there's some kind of patent issues. Not a big deal. Could be Switzerland just kind of marking its territory like my dog does, Mr. Diablo, El Diablo. But kind of interesting to see that we continue to see a lot of protectionism in Europe. Google's reportedly working over a $6 billion settlement with all of Europe, with the Eurozone. And when you run out of other people's, basically eventually run out of other people's money, they're going after a lot of the tech companies right now in Europe. And it's kind of unclear whether or not there's going to be any repercussions. Tech companies now pouring huge amounts of dollars into K Street lobbying. The question is that going to get them anything when we deal on a level playing field that everybody wants to talk about? But basically, it's you become successful in Europe, and we're going to take your cash away from you. $6 billion, pretty soon you're talking real money. But maybe is this a little lesser kind of thing in Switzerland? I think the answer is there's more than a little bit of protectionism, and I think that there's a groundswell of it in Europe, and we're even seeing it in fairly neutral countries like Switzerland. I had some comments that I didn't answer on air from email last week. I'm going to get into it, but a great deal of I guess, what would you call it? Silicon Valley getting political over the last few weeks. And I really don't have any comments on that. You either probably like it or dislike it or whatever. What I think is more than interesting over the last week is we found out a great deal more about what I like to call the faux outrage of Twitter and also Facebook. That we are finding out now. I guess it's really been known for the last year. I didn't see any hard data until pretty much, I think, on Thursday. I had some chance to go through it over the weekend. And what it amounts to is there's several people that have a political agenda of all kinds, and even the Russians are involved in this with their products. But they figured out how to gain and game both Twitter and Facebook to make it look like there's a bunch of outrage on both sides. Probably the first people to get their hands caught in the cookie jar with this were the coal companies that were hiring people, and they weren't too good at figuring out how to cover it up. We also have one of the titans of Wall Street that is funding these campaigns also politically. When we get back, we'll talk a little bit more about it, but 70% of one of the big outrages of last week, some hundreds of thousands of tweets came from just 10 people. So we're going to talk about what the value of Facebook or Twitter really is when it's so easy to game the system, and then we'll talk about Russians. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, we're talking about astroturfing, and this is the game of trying to make it look like there's a bunch of outrage or love for a product or hate or love for something. And of course, it's instead of hundreds of thousands of people, it's a handful of people. It was kind of politically kind of interesting to see that the guy that has the responsible for the most tweets of all is a professor at Kent State who is, I guess, supported by George Soros through a variety of his issues. And I don't have any problem with anybody with free speech. Probably the problem absolutely the problem I have is to make it seem like there are a ton of people seems to me like a lie. But I guess the question is, do you believe everything that you read on the internet? I know some people that are always outraged or believe that there's somebody out there, like the day today with the Rolling Stone issue of the phony article about the Delta Chis, for whatever it was worth. I don't know what the real name of them was, but we find out the whole story's phony. There's a lot of issues out here, and my question is, If it really ends up being in politics, can we trust anything we see on Facebook, anything we see on Twitter anymore, when we know that up to 70% of all the tweets are phony on any of these issues out here? And it goes into some of the other emails I've gotten, which is, if you believe in the wisdom of crowds, why don't you think that one of these things, in fact, there's a couple of companies that tried to figure out just based on tweets what people were buying and selling. Well, the problem is you have to assume that everybody, one, is telling the truth, and two, you don't have a ton of these people out here astroturfing Twitter with hundreds of thousands of tweets about a particular stock. If we could have everybody like the Iraqis stick their finger in some blue stuff so we know that you only voted right and once, that'd be one thing. But it comes on to be a problem. Facebook's up $1.23 today. Twitter's up 56 cents at $50.99. I don't know if it's going to make a difference in the near term. I think long term, though, these companies have a responsibility to make sure that I guess the best way to describe it is one person, one vote. If you make it very easy for people to astroturf your service, does it really mean anything at all? And my answer is, I don't pay a lot of attention to it, but I don't get worked up about a lot of phony propaganda, which is everywhere these days. What else is out here? Facebook also has a little bit more news coming out. It may have a little bit of problems this week. Basically, old Zuckerberg got the book to be thrown at a guy who said that he owned a majority ownership in the social media giant. And I guess the guy was going to court and going to serve an 18-month stretch. He got an appeal, and that appeal basically lets him go through a lot of the email from Facebook, and Facebook is fighting that. It looks like that's going to get granted. And on Friday, why everybody else was closed, the judge in the case told the owner, Mark Zuckerberg, they have until Monday to relinquish the information that was requested by the gentleman's lawyer. And my guess is we might see some of these things come out if they dig through and find some nasty stuff that Zuckerberg was sending around. But I do digress. But there's always just know that there may be the possibility of bad news coming out about Facebook fairly soon. And that's about it. It is a mad market. What else can you say about that? We got stocks moving out here. Zillow, a little bounce and a downtrend out here. It's still got a fairly big trend. That's why I was looking at those lumber charts earlier today. Not a big bounce, not a lot of volume so far. You certainly want to get this thing down to $94.14. That's the February 2nd low in Zillow. 1.5 million shares. We basically got into that candle on Thursday last week with 1.5 million shares. So even though we've got a little bounce out here on news, which I'm trying to remember what the news was out here. Oh, it was downgraded. Didn't seem to bother it much. But my guess is you've got probably an 85% chance in the next, probably this week, that we're going to test that 94.14, and volume at least is the same. Altera, the news earlier was it was a little weaker as people are losing patience, and of course it started to go up a little bit higher out here. No real movement so far. I haven't seen a lot of action in Intel, so it doesn't look like Intel's in a huge hurry to get this deal done with Altera. I think it would make sense. One of the reasons over the weekend became a little clearer why Intel may be looking at buying Altera, and that is that Samsung is making some deals with a company called Global Foundries. Global Foundries used to be a big public company, but it was bought out with private equity. They're trying to come back. The news is that basically Samsung sold them the technology to do 14 nanometer technology, and it looks like at least they're starting to try to look and get contracts for that 14 nanometer technology for global foundries. Imagine in the next year or two that global foundries will try to go public once again, once they've cleared all the problems up. But I don't know what their books are going to look like now that they're going to have to give a ton of cash out there to Samsung. But it looks to me like part of the Altera deal with Intel is probably based on Intel aligning the Asian chip manufacturers, global foundries, that probably will go public again in the next year or two if they have a opportunity to do so. I think this the general market being up, but patience starting to wear out if you don't get a deal within a week. I would not be surprised to see Altera come back a little bit further. Of course, the big, huge move out here today in the markets was really crude up to $52 on the K5 contract, up $3. Still in this big trading range for about 45 to 55 bucks. And kind of interesting to see all the articles out this weekend saying that gas prices are getting ready to drop because of the refineries coming back on after they made the spring switch. But we talked not too long ago about how many of these airlines looked like they had put in a high, noticing that Delta Airlines is one of those ones that is still lower today out here. And let's see, Love Airlines was lower as futures were up about 5.2. Let's take a look at Love, LUV. And this one, same thing, kind of gap down. Not a lot of volume. These stocks, although, tend to get a lot of volume late in the day. DAL, which is Delta, and what else is out here? AAL, right? American. So all those nice little gap downs pretty much look the same. You know, volume out here today, 10 million shares on American Airlines. We're getting awful close to that February 9th low. I suspect we're going to see a test of those lows in these airline stocks fairly close, and we're just a couple bucks away. So be looking for those. The volume has not shrunk that far. Now, one of the things I do want to point out is that, like in American Airlines, we've got a downtrend here, and we've got what's probably going to be a doji by the end of the day. A lot of times those dojis are either marks signaling the halfway move or the end of a move in a stocks movement. So tomorrow I would be looking probably 30 minutes after the open on how all these airline stocks are doing. I think that was going to give you a clue, and they're kind of going to be the canaries in the coal mine. If we get yet another little trip dash down, that probably means that we're going to continue to see higher crude prices. Those crude prices are probably reflective of what most people think is a deal that's going to nowhere in the Mideast. I would suspect that that's probably one of the big reasons we have a big move in crude out here, even though not many people are talking about it. The Gannett Company, it's got a nice little candle out here down today. Downgrade, I don't know if that's that big a deal, but certainly looks to me like you've got some decent volume. These media companies not really moving that far. Most interesting to me is Gannett basically went above previous highs and never had a sign of strength. Actually, on Thursday, very light volume as it popped back up. And this is the pattern I've been talking about for about a week and a half, and that is the move right on back into these trading ranges as a lot of these stocks break out on highs. Of course, big movement in movies over the weekend with a blockbuster coming up, Fast and Furious 19, or was that son of Fast and Furious 25, or the great-grandson of Fast and Furious? I don't know. I think that were so many unresolved issues in the first 6 movies in that series, kind of hard to tell. But it had a big weekend nonetheless. Now I'm watching this, and it certainly looks like we could have the same thing with IMAX today, and that is a break with volume above the previous high. So we're going to watch how this thing closes out here. February 23rd high out here had $35.73, 800,000 shares. We've got 1 million already, and it's looking like it's going to be close on that 35.73, but see how that one actually closes out here today. Did we look at UAL? UAL, I don't think I forgot to look at that one earlier when we were talking about airlines. Certainly looks to me like it is back in this gap up with a sign of strength, but down on some decent volume out here today. This one probably is the one that has the best support of the ones that we're looking at. There's two gaps, both of them on some decent volumes going back to the 4th of December and the 28th of November last year. That 28th of November pop was on 8.7 million shares. We're down, what, 5.9 million shares today. So we're at the very base of that gap. My guess is we're going to get a big clue tomorrow on what crude prices do. If they go higher, then my guess is that we're going to see these lower gaps filled in these airline stocks. Nice little bump out of VMware today. That is, where's my news on that? Upgraded, no big news out here. No volume, though, in this one. And one of the things that we're seeing is a lot of these, what I think are phony upgrades. We saw this one test its previous low, almost closed below it. And I'm talking about the March 16th low in VMware. VMW is the symbol. March 16th, $80.34, 1.3 million shares. We went through it, closed below it on Thursday with 2.1 million shares. Maybe a little phony news out here that doesn't involve astroturfing. I guess that's the market's way of astroturfing, isn't it? Phony, baloney upgrades and downgrades. Anyway, what we see in this is certainly a little bounce on light volume. You're going to see that probably retested. And if it breaks that, look for it to go to this little gap at $78. And not enough volume to really do anything. But January 29th looks like the support level and where you'd want to buy this if you're thinking long. That's $73.65, 5.1 million shares. So what else do we have out here? I think that goes through all those. Let's take a look at some others that I have that I thought were interesting. Wanted to see how this one did. Anchor, what else is that here? Is that Anchor? Dean's Foods. Maybe that's the one I wanted to look at. Dean's Foods. This thing had a gap down with huge volume. Wanted to see how it was doing today. Came down to $15.53 as low on February 10th on almost 11 million shares. We're back up in and trying to fill this gap. The first time it had 3 million shares into that gap on February 18th. We're now into that gap on Thursday, had 1.6 million shares. Today, 700,000 shares. Doesn't look like there's a lot of upside in Dean's Food. Another one that's coming back up to some gaps on high volume downs is the EQT Corporation. EQT is the symbol. This thing came down with a plethora of volume on the 8th of December. 3.2 million shares. Tried to get into it with 3.4 million shares on December 19th, 1.3 million shares on February 25th, 580,000 shares so far today, and 1.2 million shares on Thursday. It's up against 3.2 million shares. So a lot of these stocks that are kind of bouncing, coming up against the volume. We'll be back in a minute. Give me an email at
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over $70 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Anyway, we're going to look at a few more of these before the end of the day. You can always call me at 877-927-6648. Email me at path@tfnn.com and or post a message in the den, and we'll be glad to answer it. Anyway, we got to EQT, CLAC. A couple of these stocks out here looking like there is no bottom to be found. We're through pretty much the long-term bottoms in CLAC. Energy fairly good so far. And my guess is that we've got a low that goes back to April 26, 2013 at $50.23. Certainly looks like CLAC is in the ball game for it. And you've got an ABC down out here, pretty much started. See what we have out here. That would take you to $42.66 on just a 1-to-1. I don't think you're going to get there that quick unless something majorly is missing. But I think this thing does have a nice setup at least come back out to the April 26 lows of 2013 in the near future. Volume a little lighter out here, so you may have some sideways action and some consolidation. But when we look at this, very interesting to see these moves. Now, if you go to the full 1-to-1 ABC, you've got all kinds of lows back out here around that $43 level, which is the projection. Those lows go back to the June 4th of 2012 and the November 16th of 2012. And that's the ABC 1-to-1. I think you pretty much made a good, or you can make an excellent case that you broke the B point with a sign of weakness. We're just underneath that now. Probably going to need some additional movement to get this thing to do that. But be very wary of KLA 10 core. That could be an ABC down. Microsoft had a upgrade today. And to tell you the truth, it's not a bad-looking chart out here. Microsoft came down on earnings. I think they've got a lot of things going for them in the near future. If the market pulls back, they're coming back with the rest of them. I just wouldn't be one of the stocks that I would short. I had some fairly decent news in the Tech Insider on Thursday about the stock and how I think that they're pretty much doing all the right things. In fact, I spent a great deal of the weekend working on the latest version of Windows, which is Windows 10. I got the latest new browser and some new tools for programming. And as a programmer, I can tell you that there's a ton of cool things that they're making available to developers. And like they say, pretty much right now to programmers, we want to make our software loved again. If it was ever loved before. It's kind of always the company that people like to hate. Not a lot of energy out of here, but to me, it certainly looks like they're signing up for a nice run, and they're going to give away Windows 10 to anybody that has a Windows 7 or later installation. They're going to give away a 1 year of Office for all kinds of devices, including on other things like Apple and Android. They're making some very aggressive moves, and so far the subscription model has done very well for Microsoft. I think it's been a Windows, what they called Windows First, which is Windows led everything else followed behind it. They're going to a kind of an Office and software and services first model, so maybe not such the push on Windows itself, but a nice pop out of here on Microsoft, and the chart looks good. We'll be back tomorrow, same bat channel, same bat time. Remember to sell when you can, not when you have to.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.